Welcome to Markets Now. I'm Michelle Rourke with Kooima Kooima Varilek. Livestock futures are going to lean in higher this morning. We're mixed over in the grains with feed grains lower, soybeans trying to hold on to some early gains. All right, Brad, let's talk about the livestock, cattle in specific. Some gap higher openings here this morning, but let's talk first of all about the cattle on feed report, because that was actually a little bit on the bearish side, wasn't it?
For sure. Thanks for having me on, Michelle. It's show's an hour long today, right? We got a lot to talk about.
We got lots to talk about.
Yeah, so let's start with that cattle on feed report. So the placement number was a little bigger than expectations. The placement, putting that into the mix, does give you a U.S. cattle inventory, which is a record for November 1. The number is 11,986,000 this year. It was 11,956,000 last year, albeit not a big difference. But, you know, for those of you that like to read headlines, that was one of them. Now, I would contend a little bit, if you remember last year, the October and November cattle on feed reports both showed a huge increase in the placements that were largely hard to find when we got into the first quarter and second quarter of the year last year, where I felt that the number of placements were overstated. And I would not be surprised that the same is true this time. Now, to get a little bit of a granular here on the report, placement number, part of the reason the placement number was a little bit bigger was because it was largely influenced by what was happening in the south, and that was it was dry up until, you remember, a week or so ago where they had that big rain, which was bullish feeders, as it should have been. So what we saw was an increase in the lighter weight breakdown of the cattle in Texas and Kansas especially. We'll see if those cattle stay in a feedlot situation or if they still end up getting turned out on wheat. We'll see. And we'll see if we get it counted right too. I hope so. So I think had it been, if that was the only thing we were going to talk about this morning, I wouldn't have been surprised that we would be sitting here with maybe the front months 50 lower and the back months 150 lower or something like that. However, the story of the New World Screwworm. You know,
yeah,
there's
it's offsetting
that I never thought I'd use on the air, you know, but yeah.
Yeah, so talk a little bit about that, what we know so far about this New World Screwworm in Mexico. What kind of impact do you think it is going to have on the market? We gapped higher in the feeders this morning in response, but, you know, is it a long-term situation or is it just a short-term?
Just to give you a little bit of a, you know, right where I'm sitting here now while we're visiting, we are about $3 off of the highs on January feeders, up $2.30 instead of up $5.30. I wish I could give you a definitive, this is exactly all the details you ever need to know about New World Screwworm. It's too early for me to be able to do that. Yes, they found it in a cow several hundred miles away from the Texas border. You know, I wished I could give you a little hardliner on how, what do you do to eradicate it. It would seem to me like a parasite like this would be a little easier to mitigate, obviously, than something like, say, a mad cow or something like that. You know, is Mexico, right away, the reaction here, even the story itself from APHIS is not exactly very detailed. The border is going to be restricted. We've kind of jumped to the conclusion that they're going to certainly restrict feeder cattle, which I would expect. And you might say, now, is that a big deal or is it not? The last 25 years, we've averaged 1.15 million cattle from Mexico a year. That's a pretty significant number. In fact, that would be roughly 3.3% of what the U.S. calf crop is. So if it's permanent, I don't think it is. If it would be a permanent thing that, say, lasted a half a year or something like that, it would be a big deal. You would very easily justify what we were doing here earlier. And again, I don't know the answer to this. I'm just guessing from people that I talked to and the couple that I've talked to down in Texas this morning. Their initial reaction is that they thought it was a matter of weeks, not months. You know, maybe even only 3 or 4, but I don't know this. Okay. So, you know, if it's short term, then I think what you saw this morning was an overreaction. Now, I've talked with you before about, you know, the concern I have that, you know, when we had a pit traded commodity, it seemed like we were able, better equipped to analyze the significance and importance of certain kinds of news. Now it seems like you have what I call these headline algorithms, which are programmed to trade certain word phrases and things like this. So if you'll get a deal where imports of Mexican feeder cattle are going to be restricted, it wouldn't surprise me that those trigger big buy signals. Okay, and so while we're talking here, we've lost another 50, 60 cents on the feeders. So I think the market maybe is responding a little bit. These kind of days are tough, Michelle. I tell customers, I said, maybe we should drink coffee. That's my way of saying, let's wait for an hour and see once after that first blow by goes through to see once where we're really at.
Yeah, and feeders had a huge up week last week, the week before. That's been pushed as we've had such good cash. The cash market's been on fire for feeders out in the country, hasn't it?
Cash feeders have been very, very strong. Michelle, you're spot on. But we've just put $16 on some of the front months in 6 days. I mean, let's be realistic. That's not normal.
Yeah, time maybe to take a little bit of a break here. The other thing that was strong last week was Fed cash cattle trade, better than expected. Maybe I know you called it steady, and we got that in the north. But even 1 to 2 higher in the south. Did we expect that?
We certainly did not. And in fact, by the end of the week last week, I ended up trading a few cattle as high as 188, which would have been 2 to 3 higher, even in the north. Yes, wow is right. Now we're talking about something that I feel a little more confident in talking about here. So it's Thanksgiving, and this is the week where you transition back to thinking about what is the retailer going to feature after the Thanksgiving holiday. We've seen, I think, relatively stable and good demand here domestically, especially, but the exports have been decent too. And now I think we'll see a shift back toward the middles. In other words, the kind of thing that you would specialize for a Christmas dinner, for a office party, New Year's. Generally speaking, those middle meat, the steaks. I'm talking about ribeyes, steaks, strips, tenderloins. That feature will stay pretty good almost all the way up until we get close to the Super Bowl. So the demand side, I think, is okay and going to improve. And the supply side, I feel even more confident about. I think that we're about finally through this stubborn supply of these long-fed farmer calves that weigh too much. Let's see if we can't clean up some of this weight as we move into this next couple of weeks into next month, and I believe the supply of yearlings is less. So I think that if you want to go back to the way the market had been trading, which was largely dominated by the cash has to be king and cash has to lead us, then I think the front end of the market on the live cattle, the fed cattle, I think is okay. So better than okay, actually. I think by the end of the year we're going to be at a different price.
Yeah, hopefully we'll get up to that benchmark you keep talking about, that $200 level. The hog market, obviously we've had the funds exit a little bit of their record long position here, but do you think we keep correcting? Do we keep grinding lower? Or right now I feel like the cattle are almost pulling the hogs with them at some point.
I don't disagree. The hogs have been interesting, to say the least. I mean, nice little $20 rally here on the hogs. This traditionally December, of course, is a seasonal low time. Doesn't feel like it, does it?
No.
You've probably benefited a little bit from geopolitical interest here. You've had a hog supply that apparently the USDA missed by 3-4% maybe or more, with actual supplies being less than a year ago at a time we thought we had 3% more. So there's been some real reasoning here, but we are now $19 or $20 off the lows. I think as you move into a little more supply and probably a little more questionable toward demand, especially if you look past January, right? It's very important that we maintain a great relationship with China as a trade partner, and for that matter with Mexico as well, as they take an awful lot of pork that we have a hard time selling to anyone else. So for me, if I was a marketer in that deal, I would be very, very, very inclined to use this big move that we've had with the uncertainty that we see coming in the next 60 days to do a little bit of price protection.
Yeah, and speaking of Mexico, they were in for another big tender of corn from the U.S. this morning, although it's not really helping us because wheat's kind of dragging us down. And the soybean market, we're a little higher. Is that all technical, or these rumors about China maybe coming in to buy?
Well, I think that China, the talk about China maybe buying a little more beans was certainly helpful. And we could use some good news over there in that bean pit. My goodness.
Yeah.
But some of it, I thought, kind of an odd day. The way we finished up last week on the beans, I mean, the market broke into new lows, was trading awful, and then it just like we ran out of selling, had a reversal up, which is a good step. Then it looked like we were going to get some follow through, but I don't know. It's like watching a wrestling match. When your kid's ahead, you can't get that clock to run quick enough. We're only a penny higher anymore after being 7 or 8 higher. I wonder if it's going to last. The beans have got a tough story here. We've got enough supply, and then you've got a South American crop that looks non-threatening, right? I mean, the weather appears very non-threatening, and you got a monster acreage planted, so the risk there that they have a chance to raise a record crop is real. The corn thing to me is a little more fun to talk about because it's a little more of an anomaly. I think more of us are asking the question, so if this crop is so big, how come the basis is so strong?
Right.
And I'm not going to quibble with what the USDA thinks the crop is, but I can tell you that I don't think I'm alone thinking that this crop is probably a little overstated. You continue to see good demand. You referenced the exports, but ethanol grind is very, very good. Visually, just somebody sitting up here in Northwest Iowa, I don't see these mountains and mountains of corn piles that one would maybe feel like you would if you indeed had this giant crop. To me, there was enough variability in the conditions, flooding, way too wet at first, and then we finished out with the crop, but ran out of water in a lot of places here at the end of the growing season. So we shall see. We got to get through 435. It's very obvious what December corn has to do to look better on a chart, and I suppose we got to get through about 442 on the March. Otherwise, we're caught in the same trading range. But I do have a little more hope for corn than I do for beans, for what that's worth.
Yeah. If we could get wheat to quit going down today, that would probably help. I think it kind of gets drugged down by that. But to your point, basis levels have been strong, and I think farmers really are not selling. That also adds to that strong basis, doesn't it?
100%. And we'll see if they can hang on to that deal. Maybe there's some tax consequences about selling corn this year, and that won't be there next year. So that might change the dynamics a little bit. And of course, we'll have to reflect on what the new administration's doing from a export import friendliness standpoint too. So
absolutely. Yeah. All right. Thanks so much as always, Brad Kooima with Kooima Kooima Varilek. That is Markets Now.